Hey, good morning, everyone. It is Wednesday, March 20th. I was going to say February, but that would have been incorrect. And today we have, as everyone expects, the Federal Reserve rate decision. It's FOMC day. It's a huge day in the markets, right? A lot of people are going to have all eyes on this. They've been looking forward to this for a while. And the Bears have been looking for events every week, every month, looking forward to for that being the bear catalyst to start flipping these things back around. So I gotta caution people about that realistically. Looking at all of this bear fuel is just fuel for the upside realistically, as we've seen. Prices have just been rotating sideways. We've been picking up dips in the market, right? Buyers have been stepping in pretty aggressively, and all this bear drama, all of the, I guess, bears screaming from the top of windows and whatever has just been adding fuel to the fire to the upside. Now, am I blindly bullish? Not necessarily, but I have to also understand that trying to short these highs every single time is probably not the case. I am one to be looking for a pullback over the next few months. That could be between 5 and 10% realistically. I'm not expecting anything massive in this market, but I'm still looking for that downside move. Until that comes, right? I gauge that by changes in auctions. Until that comes, which hasn't looked to be the case, just continue to the upside. We could have another 100 points to the upside, and a lot of that hinges on monetary policy and the Fed. Something that we'll see on today's session, because rate cuts, right? Rate cuts are the, I guess, all encompassing main event that's been plaguing the market, if you will. When are they going to cut? They talked about cutting. Why aren't they cutting yet? What's going on? The cut is most likely going to be one of the catalysts that help prices actually pull down. Um, Realistically, the first Fed cut was expected originally in March. Now it's expected in June. So they keep pushing back on that, adding fuel to the bullish momentum. So let's take a look at this, right? They're taking center stage today. With inflation proving stickier than expected, right? Somewhat. Markets not necessarily reacting to that. We had CPI, PPI last week. The central bank itself finds itself balancing between hawkish and dovish views, while the policy setting FOMC is widely expected to hold interest rates at 525 to 550 in that range. I think it's about 99% probable if you take a look at FOMC Fed Watch futures. And it's looking to keep this in that range for the fifth straight meeting, right? Five straight meetings of this range. So the bigger item to watch is going to be the so-called dot plot, which is what a lot of people are going to be looking at, because that's the future expectation of the move. The market already priced in pretty much whatever it has to price, and obviously there's going to be some kind of volatility from this event, but realistically it wants to gain that movement and volatility with the expectation of future decision. So the dot plot generates the future of the rates, the expectancy at least, which is going to be new information for us. So policymakers will update their rate and economic projections for the first time since December, potentially deviating away from the three cuts that were previously penciled in by the end of 2024. So we don't have that many meetings left, I guess. I think there's no meeting in April. We got May and June. Obviously, May there's not going to be a cut, but June is expected to have the first cut. And then from then, we still have only a handful of meetings for those next cuts. So a month's long standoff between markets and the Fed has drawn to a close, as a slew of economic data in recent weeks has reinforced the monetary authority's case for caution. In January, what we saw, the Fed's funds futures traders had priced in 6 to 7 quarter point rate cuts by the end of the year. Right, that's a lot. Now, with inflation falling slower than expected, traders see three reductions starting June or July, aligning with the Fed's December summary of economic projections. So earlier this month, we saw that Jerome Powell emphasized in congressional testimony that the central bank's inflation battle has made good progress towards its 2% goal, though just a bit more evidence is needed before implementing the first rate cut. We're not far from it, he declared at the time, and setting up investors to pay close attention to any follow-up commentary in today's post-meeting press conference at 2:30 p.m. Eastern Time. Reporters may reporters may ask how the combination of This year's sticky inflation prints and weaker retail sales data affects his thinking while taking into account the central bank's dual mandate for stable prices and full employment. And I remember, I think it was last year at some point where Jerome Powell was asked about that in a testimony in front of Congress about employment and what it would take with the matter of inflation. Jerome Powell was not one to shy away from saying, you know what, 10% unemployment, that's fine as long as we get inflation under pressure. With a, I guess, what was the word? With still strong employment figures, right? Inflation running a bit hot. I'm not saying that that will manifest, but we're kind of leading into that kind of scenario. So, should the Fed make a hawkish shift, markets will take that as a higher for longer stance, which could interpret higher until recession, according to some analysts. Also, we see the risk of recession, citing state-level economic data from the Philly Fed and other figures from high-income countries that show their business cycles are ahead of the U.S., suggesting that the global economy is cooling. So we'll see how that shapes up. I think it's going to be a fairly volatile end of session. I don't see too much shaping up before we get to the Fed realistically. The Fed comes out 2 p.m. Eastern. They're going to make that rate decision, and then obviously we're going to wait for that 2:30 remark for Fed Powell's remarks and the Q&A, which is most likely going to see more expanded movement. There's a lot of volatility that's involved in the first 20-30 minutes of that rate decision at 2 p.m. Eastern, which gets a lot of people trapped and stuck just trading willy-nilly, so just keep that in mind. The morning session expected to be lighter volume, slower, kind of choppier, so don't go crazy with that. Just understand that you're most likely going to have 1 to 2 or 0 trades realistically on smaller size in anticipation, right? You're going to want to have fuel for the Fed event itself. That's where things are going to pop off. And as newer traders, understand that you're probably going to have to take a little more risk. There's going to be opportunities, there's going to be moves, but be very, very selective and try to understand what the situational movement of the market looks like for a directional perspective, rather than just being like, oh my god, it's moving, click, 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 let's see what happens, right? Because you can lose a lot of money very, very quickly. You take stops very quickly in these volatile environments. So, in some other news, right, obviously there's going to be a lot of eyes on the Fed. That's going to be the main event today, naturally. We saw the Bank of Japan yesterday. We talked a bit about that. But there is some other news. Chipotle. So when we look at Chipotle, what is it, CMG? Look at the price of Chipotle. What you can see, right? That gapped up even higher. This thing has been on this mega giga rally for quite some time, right? Look at what burritos do. The COVID lows were $430. Right now we're trading at nearly $3,000. Why are we gapping up on Chipotle? They're implementing a 50-for-1 stock split. 50-for-1, right? That puts us, wait, what is that? 3,050. Let me see if this math is correct here. 50-for-1 stock split. This is why we're up. What's it called? This is why we're up about $150 realistically pre-market here. So 3,000, 50-for-1 split. 3,000 by 50, $60, right? I'm rounding it to 3,000, just so I don't want to have to divide 2,930 by 50. But $57, $60 realistically is going to be the price that we're going to look at for the split on this. It will subject to shareholder approval in its meeting in June 6th, and if approved, right, it's not fully in, but if approved, the company shares are expected to begin trading on a post-split basis on June 26th. So there's still some time realistically. Chipotle has announced a special one-time equity grant for all restaurant general managers as well as crew members with more than 20 years of service. So on that news, you can see Chipotle is up very aggressively. I think the options on this are fairly liquid, but this thing has been running it seems like a very quality name that's just been running and running and running over time. So it becomes very attractive if it's priced, let's just say $60. So if it's priced around $60, right? I know a lot of people on a psychological aspect are going to be like, okay, well, it's not at 3,000 realistically. it's a much more affordable individual stock. It doesn't mean that it's worth less or that anything like that, but when it becomes more affordable in that sense, a lot of people are going to be looking at this, potentially flooding back in. So keeping that in mind. Some of the other news, we have Intel, right? The U.S. government is awarding Intel about $20 billion in grants, ticker symbol INTC, and potential loans, which include up to $8.5 billion through the CHIPS and Science Act. All that money will advance Intel's commercial semiconductor project across Arizona, Ohio, New Mexico, and Oregon, and it's a huge deal. Secretary of Commerce Gina Raimondo declared it means bleeding edge semiconductors made in the U.S., keeping the U.S. in the driver's seat of innovation. It also follows Intel's plans to invest over $100 billion in America over 5 years to boost domestic chip making capabilities, critical to emerging technologies like AI. Nvidia, Intel, unlike Nvidia, AMD, right, some of the other chip makers, hasn't been doing so sexy, so hot. So even with this news, we gap up very slightly. This one's a huge lagger in the chips in the chips department. So I haven't liked this for a while, and even with this news, I'm not that big of a fan when you can look at something like Nvidia that'll just pop up 10% in 1 week. Keeping that in mind. So let's take a look at these equity markets. What we got in store here for today. Yesterday we looked for that just monster gigabid, and that's what we got, right? All day, just buy. Today we're coming into some kind of the top band of the resistance. The likelihood of a massive expansion before the Federal Reserve and just trading into all-time highs, running like 30-40 points higher, I think the probability of that is not that high. I think most likely we stay even at the top of this balance and just rotate, just kind of sideways chop until that comes out. The first major resistance is 52.46 to 48, based on heavier volume that trades. We have heavy volume into this like 45 as well. Heavier volume over here. So at the top of this distribution, some heavier volume trying to push price a bit lower, getting a few traders trapped on the longs. But realistically, 52.26 to 27 I think is a decent barrier to keep prices within that 15 to 20 point area to kind of keep us rotational. Otherwise, we complete an auction that's much, much lower. You drop under 26, realistically, 52.08 isn't that far of a level based on the incomplete auction that shapes there. But most likely, you see this top band of the distribution, 15 to 20 points. I suspect we most likely trade in that area until the Fed comes about. So going into this trading day, the morning session, I warn a lot of you traders, a lot of day traders to size down, understand that we have a very big event that comes out in a few hours in the afternoon session to close out the session. A lot of people are going to be waiting for that to reposition and move. Even that event's going to be very volatile. Newer traders might just want to look at today's market and just honestly walk away. So just keep that in mind. I don't want to get too active in today's market, especially this morning, so we'll see how this goes. So let's wrap this up. We'll chat soon, everyone. Let's do this again tomorrow. By tomorrow morning, we'll have a solid understanding of what had happened in the FOMC, obviously, after that event passed, and we'll talk more about that. So thank you all. We'll chat soon, and take care.